Good morning, everybody. We're joined by Angie Setzer to discuss the ag market. Angie's been joining us the past few weeks, talking a lot of good information about the ag world, which has been really volatile. How's it going, Angie?
It's great.
Angie from Ags. I almost got that confused
Oh,
right
I
over
know.
there.
It's definitely it's a tongue twister if you say it too many times.
Yeah, yeah. So, I remember the last time we spoke, you were talking about you kind of liked corn prices. You thought that they could
Mhm.
be moving higher. I think since we talked last, there actually hasn't been much price movement, which it's been very volatile in the ag world.
Mhm.
But, it looks like soy continues to have pressure. We're trading near the lows. Corn hasn't done a whole lot, and wheat has been volatile, but it hasn't really done a whole lot. What are we looking at right now? What's on everybody's radar?
Yeah, it's definitely there's a lot of stories. There may not be breaking news each and every day, but there's a lot of things that we're just kind of monitoring. And soybeans right now are kind of the wet blanket when it comes to corn price movement and things of that nature. We saw corn kind of respond positively towards the tail end of last week to the idea that maybe some of these yield estimates that had been coming in at the higher level, the USDA, came out last month with that surprising adjustment much higher to the 178 plus on yield. We're now starting to see some indications that maybe that's not necessarily the case. Now, for corn, this year's production is going to be of utmost importance simply because we're already outpacing supply via demand. So we'll end this year with we ended this year because the new marketing year started Sep 1. The idea was we had about 2 billion, 2.1, 2.2 billion bushel of corn hanging out, which is about double what you would consider the minimum pipeline level for corn supplies, right? So it's easy to say, oh, that's more than adequate, that's burdensome. But right now, what we're looking at with the latest USDA numbers is demand outpacing what will be a record corn yield and some really large production. We're still going to see carryout drop 3 to 500 million bushel, depending on how everything kind of plays out as we move ahead. So the idea there is that 1 to 2 bushel per acre yield adjustment, has the potential of 80 to 160 million bushel reduction. So it could take us further down. The idea as well, or the conversation as well, is that right now with what took place in Argentina, where they introduced an export tax. They reintroduced this export tax that they had removed a few years ago. That's definitely not going to encourage producers to plant more corn. Argentina is the third largest exporter, and they'll be looking to get started on planting here over the next month and a half. And then Brazil, their second corn crop, was reduced due to drought this last go around. So the U.S. is basically, and I've mentioned it a few different times, the only supplier of corn, really to the global market structure. Ukraine looks like they're having a decent crop. That's been a conversation, but due to the drought in Europe, much of that corn won't make it into the global pipeline. It'll just basically work its way into the
So,
the European market
So
structure.
following with that, why do you think corn prices haven't risen very much, or haven't risen, and we're near the low of the year?
Yeah, because the conversation at this point in time is, a ratio that you tend to see between the soybean and the corn market. So you tend to see soybeans trade at a X amount times, the corn price. And so the conversation has been with the weakness in soybeans is that we'll see this significant switch over to corn in the spring. So it's a really weird or a unique type of situation that right now a lot of folks are able to ignore perhaps the short term fundamental market structure, at the sake of looking at the long term. So they're saying, okay, if corn rallies significantly over the next 6 months and soybeans stay where they are, which they should actually be, you could argue based on the current supply and demand outlook and the lack of trade deals with China and things of that nature, you could argue that soybeans should be, $2.50 lower than where they're currently trading right now, from a price standpoint. So it's hard for corn to move higher when soybeans have such a negative fundamental feel. In addition, it's like I said before, we've grown so accustomed to just having too much corn, it was the same thing with wheat. You couldn't convince the market this spring that there were wheat production problems until we got into late May, June, and started to realize that it wasn't just an isolated incident. We really were seeing some production issues. So same story. It's like turning the Titanic. And what's not helping, of course, is the overwhelming negative fundamental picture that you could say is present in the soybean market at this point in time.
Right, so it's more of a ratio sort of corn being pulled down by soy. You feel more, and you think as kind of the numbers play out, it's something that will wear off when people actually take a look at what's actually being supplied on the corn side.
Yeah, yep. We'll definitely want to see how the cash corn market works its way out. And it's not helpful right now. As I mentioned before, as of September 1st, we had over 2 billion bushel of corn, 2.2 billion, which is historically large. So if you're driving around the countryside, if you're a commodities trader or something like that, you're seeing, tremendously weak basis values, which is the difference between cash price and futures, and basically the function of local supply and demand. You're seeing very weak levels there due to the fact that a lot of corn has made its way into the pipeline from the farmers looking out and realizing that harvest is 2-3 weeks away. She's got to open up their bin space. So they're going to take their grain to the elevator, and then elevators as well, having to make space to facilitate harvest. So there's a lot of grain being piled outside under tarps and things of that nature. It's not unexpected, but it's always shocking to see. It seems like the market always reacts, kind of with a gasp. The start of September when grain moves its way into the pipeline and has to find really this temporary type storage. And the $1 million question right now, of course, is the weather pattern has changed significantly. So we went from some drier conditions throughout Iowa, Illinois, Indiana, Wisconsin, Minnesota, through July into August, to there's portions of Iowa that have received 9 inches, 10 inches plus, with more rain on the way. And we're watching the remnants of this tropical storm work its way into the Corn Belt. And so a week ago, 2 weeks ago, there was this idea that corn harvest was going to take place the middle of September and happen, quite rapidly because maturity of the crop is ahead of average. Well, now with the amount of rain that has fallen, there's a twofold type of concern, quality of the crop, because once a crop's ready to be harvested, you definitely don't want to put too much water on it, and then the ability to get it harvested. So it'll be interesting to see kind of how the cash market ebbs and flows over the next 3 weeks and what that we might mean for futures moves as well.
Right. And what about the data that's coming out, I guess, next week? Any thoughts on if that's going to be a catalyst for the markets?
Oh, it could have huge implications. The September report's a big one, from the USDA, simply because we start to actually see ear data for corn. So in August, they basically just go out and count what ears are on the plant in certain plots that the USDA has across the Corn Belt or across the country. And they take a lot of farmer survey data. And so a lot of the farmer survey data that was compiled for the August report was done the first half of July. So if you look at what the weather was June into July and farmer attitude June into July, there was a lot of ideas that the crop, we had talked about it prior, where a lot of private analysts were having, kind of whispered conversations that corn yield could be 180 plus nationally because of the conditions of the crop and what the weather forecasts were looking at and things like that. Well, that's changed quite dramatically as we've worked our way through the rest of the summer, had a lot of heat in July during pollination. We're starting to see some questions over kernel depth, which is what really kind of helps to make a yield for corn. And so there's a lot of uncertainty as to what we're actually going to see once we get into the field. So the September report will give us a bit more of an indication as to what actuals are. And so that could be a huge catalyst, and a lot of folks are also expecting the USDA to come out with, perhaps another increase in soybean yields. So there's this anticipation that we could see a supportive report for corn, but perhaps a negative report for soybeans. And with so much uncertainty actually taking place in the market structure when it comes to production until we really get into the field and start harvesting. There's really a good chance of a surprise, one way or the other with these numbers that are coming out next week.
Yeah, and do you take a look at the volatility market, like the options, and see kind of what they're pricing, or?
I pay attention to it out of the peripheral. A lot of times, if I have customers that want to supplement their cash trades via, an option strategy or something like that, we'll watch and see, what is paying, or if there's any sort of real opportunity. And right now, it seems, or it appears to be relatively flat, or at least it has been over the last week or so. As we work our way into tomorrow, Friday, Monday, Tuesday of next week, then we'll start to kind of pay more attention to the option skew to see which way the traders are expecting. It kind of gives you an indication as to at least what traders are expecting
Exactly.
the release to look like. So yeah, so we'll pay attention to it. But right now, as of late, at least, it's been relatively flat from what I've seen. Just, we're kind of stuck in this range. We are towards the low end of the recent range, and so, at this point, it's very, very possible that without any major change in information, we could kind of remain range bound, which is very common, or has been very common for grains for the last 5 years. We could have established this new range, and right now I think you're seeing it in wheat. Wheat's trying to kind of figure out what the low end of the range is, and it's troublesome for some because they're looking at the September market, which really no longer matters for us. And so the December market is on the wheat, especially, is probably going to try to establish what was the recent low, off the SEP. And then we just got to kind of see where this market's going to trade out as we get more information and move closer to harvest for corn and beans.
On the wheat subject, I don't know if you saw Adam Collins joins us on Mondays, and yesterday he was on yesterday due to the holiday, and he looks at the COT data, and he was showing how speculators continue to have a record long wheat position, and I found it really interesting, especially given the recent sell-off. I mean, it's been about a month now of a downtrend from about $6 down here to $5.25 in December contract. And so typically you'll start to see some position squaring on such a sharp move, but his data is still continuing to show a very large spec position long wheat. And I wasn't sure if you had any, thoughts on that.
Yeah, I mean, it wouldn't surprise me to a certain extent. Of course, the commitment of traders is Tuesday's info released on Fridays, so there was a big shift in the market structure there. And I think that might have been part of why you saw that 16-cent sell off yesterday. Is that and I'm looking at Chicago futures specifically, but we had the confirmation of the September 3rd Russian government exporter meeting where a lot of people just kind of said, oh yeah, we're fine, we're not going to limit exports and things of that nature, and so that was easy to say that was why we had the wheat market down. I think much of it really came from the fact that we saw the end of week data indicating that this long spec was still in place, and there was a little bit of a run for the exits in that degree, and so we'll see, where that market heads. I wouldn't be the least bit surprised to see that DEES 18 try to test the $5 range, just because it's been such a strong support level. It may wait a minute to do it, meaning that the SEP futures go off next Friday. So it may take until after the SEP futures go off. But I wouldn't be the least bit surprised to see it try to test that, $5.05, $5 range and see SEP wheat kind of fill some leftover. It seemed 483 was a very magnetic number for the front month to trade towards. And so I wouldn't be the least bit surprised to see some further downside, and a lot of it's going to depend, from a fundamental standpoint. You're paying attention to what's taking place in Australia, where there is some conversation that we could see some rain come into the drier areas. But the big thing right now, it continues to be Russia. They've been exceptionally dry over the last 3 weeks. They're supposed to get started planting their wheat crop here any day now. They really like to get their winter wheat crop in prior to the end of September because it needs some time to get established. And if they get some rainfall, you're going to see a lot of continued pressure on the wheat market, because there's going to be, a real removal of concern that you could see limited winter wheat plantings, or at least some better moisture for the winter wheat plantings. So right now we're kind of waiting to see what will develop there when it comes to the next couple 3 weeks of weather in Russia. But like I said, I the wheat market had a great run, and but when you look at cash values and spreads and things of that nature, it definitely was a little bit too big for its britches. So I'm not surprised we've seen this recent sell off.
Yeah. So, any sort of trades or changes that you're looking at right now based on the market and what's coming out? Or are you still kind of sticking long corn as your bias?
Yeah, Longhorn's my bias. I'm really neutral soybeans just because I've learned my lesson. I think, like I said before, from a fundamental standpoint, if you look at it on paper, you would I would be a seller. However, any day we run the risk of a Chinese transition or a solution to that, which obviously at this point in time that seems far off, but the administration thrives on chaos currently, it seems. So that's kind of one of those things, and I don't mean that negatively or from a political standpoint. I simply mean it from a standpoint of we're really good at having one headline on Tuesday to trade, which is we'll never solve the Chinese deal again, to by Friday all of a sudden everything is kumbaya and we're happy. So there's always this risk that you could see a big portion of negative fundamental information removed, but there's also this underlying factor that is really a giant question mark in the market structure, which is the African swine fever that is developing in China. And that is at this point in time, they just confirmed their ninth case, and they have to cull the hogs. So if they discover that this disease is on a farm, the hogs that are on that farm need to be eradicated, because the disease is a very active, spreading, and very troublesome. And so there is some question that even if we were to see the Chinese trade issues remedied, over the next 6 months, you could see a significant reduction in their hog population. So does that mean that they stop taking in meal and beans from an import standpoint because they have less mouths to feed? And what could that mean for hog or beef exports, from the U.S.? So there's really a lot of uncertainty at this point in time as to what we could see. So yeah, for me right now, trade wise, I do think we remain range bound. I wish I could become more committed or married to an idea, but at this point in time, it's really one of those things where we have our knowns, but our unknowns greatly favor or are much larger than the knowns that we have currently in place.
Yeah, no, absolutely. If that's, you got to wait for your opportunities, wait for what the market can give you. And, there are tons of trades throughout the year. So lay low until those big opportunities show up. So what day is the actual data? Is it next Wednesday or next Friday?
Next Wednesday, the 12th is when that comes out. And then once we trade that, we'll trade that for about a day or two. And then we'll start discussing what the quarterly stocks will actually show on the 28th. So we could have numbers released on the 12th that say our old crop carryout was X. But on the 28th, we'll actually get legitimate data from the USDA telling us exactly what it was. So that could change things a little bit as well as we move ahead.
Sounds good. All right. Well, thanks a lot for the update. A lot of great information from Angie, and keep us updated, especially before those figures in terms of what the traders are thinking, what the what the different landscape is, and kind of what that expectation is, and what sort of ballpark moves we could be looking for. It's real interesting.
Yeah, we sure will.
All right. Thanks a lot. Talk to you soon.
Talk to you soon.